The CMHC requirements for insurance. A lot of times we'll have clients who either have multifamily assets and looking to
Yeah.
restructure their debt. Maybe they get into CMHC and they get put in touch with a third-party company. A third-party company is in charge of being able to, make sure that this client is, able to get the specific parameters the lender requires for this
Right.
insured. And it's very different from requirement standpoint than your normal regular building insurance. Can you touch on what they want, what co-insurance is,
Yeah.
why they're over insuring buildings, like what you can expect? Because a lot of the times, you call your insurance broker up and you got like, I can get a policy in 2 days.
Yeah.
It takes a week of
Yeah.
going back and forth between this third party risk department and
Yeah.
you to be able to make sure that this it happens. And the cost is more, it's overinsured. So just touch on why that's happening and what that process looks like.
Yeah, great question. The banks have an insurable risk in your property. They've lent you money. They want to make sure, for one, if it burns down, that they're going to get their money back. So what we've seen lately with Equitable, we've seen it with certain banks. They'll use a company like Risk, for example. What the bank needs is they need broad risk coverage to make sure that the coverage is sufficient. If something happens, they want to have multiple coverages available to cover the loss, right? So there's certain companies that will offer, let's say, cash value versus replacement cost. So let's touch on that because that's a big difference. So cash value means that they're going to give you a depreciated value of the actual building itself. So what they want is they want the whole thing replaced no matter what. If it burns down to the ground, I want it replaced, right? So you can understand why a bank would be like, no, I don't want cash value. I don't want the depreciated cost. I want replacement cost, right? So that's the biggest contention. Some insurance companies, a lot of insurance companies, especially with older buildings, and we're seeing a lot of people buy older buildings. Maybe it was a manufacturing plant or a school. It's an old school. They're now converting it. And you know how a big of a pain it is to even get the banks to accept it.
Mm-hmm.
Think about an insurance company with an older building with old plumbing and all that kind of stuff. They're not going to want to offer a replacement cost, give you a brand new building when it was a 1920 building, right? So that's a big contention there between, for us is, how can I work with the client to make sure I get all the sufficient information? We're going to, upgrade this, we're going to upgrade that, build a story for an underwriter so that the underwriters are okay with offering certain coverages. And those coverages are a difference between you closing and you not closing. And we know how expensive it is when you don't close.